Welcome to today's video, Forex Traders. The title might sound a little surprising. Why trading less could mean winning more. In a world where we're told more effort equals more reward, could doing less actually be the secret to success in Forex trading? Stick with me as we dive into why quality beats quantity every time and how you can use this mindset to transform your trading game. Picture this. One trader is taking dozens of trades a day, chasing every market move, while another takes just a handful of trades a month, but walks away profitable. What's the difference? It's all about precision, not frequency. Today, we'll break down why trading less can lead to better results, bust some common myths, and give you practical tips to make it work for you. Let's start with the elephant in the room, overtrading. Many Forex traders, especially beginners, fall into the trap of thinking that more trades mean more profits. But here's the reality. Flooding the market with daily trades often leads to emotional decisions, higher transaction costs, and frankly, more losses. When you're constantly in the market, it's easy to lose focus and let fear or greed take over. Think about it. Every trade you take comes with a risk. Multiply that by 20 or 30 trades a day, and you're not just risking your capital, you're risking your mental clarity. Quality over quantity isn't just a catchy phrase here. It's a lifeline. So how do you trade less and still win more? It starts with a solid trading plan. A good plan is like a roadmap. It keeps you on track and stops you from veering into impulsive trades. Without one, you're just guessing. And in Forex, guessing rarely pays off. Take Alex, for example. Alex used to take dozens of trades a month, jumping on every signal he saw. The result? Break even at best, losses at worst. Then he switched gears. He built a trading plan, set strict rules for when to enter and exit trades, and limited himself to just 3 or 4 trades a month. The outcome? Consistent profits and a lot less stress. Here's a simple way to think about it. Trading is like being a sniper, not a machine gunner. A sniper takes time to line up the perfect shot, fewer attempts, but a higher hit rate. A machine gunner sprays bullets everywhere, hoping something sticks, but misses more often than not. In Forex, your bullets are your trades. Wouldn't you rather take a few well-researched high-probability shots than fire blindly and hope for the best? It's better to take a handful of well-planned trades and break even or profit than to flood the market with daily trades and end up with the same result. Focus on precision, not frequency, and you'll see the difference. There's another huge benefit to trading less: your mental health. Forex trading can be an emotional roller coaster, especially if you're in and out of the market all day. By stepping back and taking fewer trades, you give yourself space to breathe, think, and reset. Studies show that breaks improve decision making. And in trading, clear decisions are everything. When you're not glued to your screen, obsessing over every pip, you're more likely to stick to your plan and avoid revenge trading after a loss. Less trading doesn't just protect your account, it protects your peace of mind. Now let's tackle a common myth: the idea that more trades automatically mean more profits. In Forex, where markets can flip from calm to chaotic in minutes, this just doesn't hold up. Overtrading can lead you to chase losses or jump into low probability setups. The truth is, one great trade can outweigh 10 mediocre ones. Think of it this way. If you take 20 trades and lose on half, you're playing catch up. But if you take 5 trades with a solid edge, you've got a better shot at staying in the green. It's not about how often you trade, it's about how smart you trade. Ready to put this into action? Here are some practical tips to trade less but more effectively. 1. Narrow your focus. Pick 1 or 2 currency pairs you know inside and out. 2. Master technical analysis. Use tools like support and resistance or moving averages to spot high probability setups. 3. Set clear rules. Define your entry, exit, and risk levels before you trade, and stick to them. 4. Keep a trading journal. Track every trade to learn what works and refine your approach. These steps aren't flashy, but they work. They force you to slow down, think critically, and prioritize quality over quantity. Let's bring this to life with a story. Meet Sarah, a Forex trader who learned this lesson the hard way. Sarah used to trade all the time, every day, multiple times a day. Thought she was seizing opportunities, but she was just spinning her wheels. Then she cut back, focused on her best setups, and started seeing results. Profits went up, and she actually enjoyed trading now. Sarah's story shows that trading less isn't about being lazy. It's about being disciplined. So why does trading less mean winning more? It's simple. Fewer trades give you more control over your emotions, your strategy, and your results. Quality over quantity isn't just a strategy. It's a mindset. Focus on precision, not frequency, and watch your trading transform. If you found this video helpful, hit that like button, subscribe, and ring the bell for more Forex insights. Thanks for watching, and happy trading.